through their retirement years. We do this work for a fee, but on a Saturday morning, we are here for you absolutely free. So if there's anything on your mind, things you've been heard about, things you're concerned about, things your brother-in-law may have told you that just doesn't sound right, we are here. So all you have to do is pick up the phone and dial these magic numbers.
The numbers are 844-580-9326. That's 844-580-WDBO, or you can send in your open mic using the free WDBO app. And we got an open mic during a show earlier today on this topic of today's show. This show is what's happening with silver, and we got a question from Kirsten.
The question is that it's recommended that part of the portfolio be in silver and gold. But right now, with the influx of how much our gold and silver is worth, is now a time to cash in on that, or should we still be holding on to that and still keeping it as part of the portfolio?
Good question. I think the first question is how, I don't think she said what percentage of it was of her portfolio.
That's what she was getting at, I think.
Did she mention a percentage there? I don't think I heard that.
I don't think I heard a percentage.
No, anyway, if it's you want to whittle that down, I wouldn't have it as more than 5% of your portfolio.
Right.
We can see the volatility that it has. It's been taking a long time for silver to run up the way it has. Gold has certainly gotten the headlines as well. But, the question is how much should you have? Should time to sell? I don't have a crystal ball. It's like trying to predict the highs and lows of any kind of investment. But overall, the idea between good investment management is to have diversification. And a 5% holding in that kind of investment, I think, is appropriate. And you'll have to make that call whether you want to take gain and enjoy the benefits of it, or perhaps what a lot of people suffered yesterday, right, Rodney? Right. What happened in the market?
Yeah, the silver, which has been up big, and we'll talk about why a little bit later on, but down 31% yesterday.
So here you are.
Yesterday.
How would you like it if you had an investment of $100,000 and all of a sudden it dropped down to $69,000 in the same day? That would give you heartburn.
Yeah, it doesn't feel good.
No, and that's kind of the risk that you have in those kind of commodities. It's unusual, but they are subject to big moves like that. It's not for the timid of heart, but like I said, there's a place for it in portfolios, and you could do it.
Well, and to get back to your point and also address the question, so if you're at 5%, and say you did that a year ago, year and a half ago, so that percentage of your portfolio has creeped up, right?
Oh,
it could be as high as 10%.
That's correct.
So it's a perfect time to do what we always talk about, is to rebalance.
Rebalance.
Right? Dial that back, take some profits off the table. You and I have talked about before, you never regret taking a little bit of profit off the table, right?
Yes, nothing wrong with that at all.
Right.
I saw we had an email question float in there from one of our listeners and clients there. Can you read that, Josh?
Yeah, of course.
It's on topic as well.
Yeah, of course. This one came to us as well. This listener asked, my husband and I bought silver in 2014 for about $32 per ounce. It's taken this long to really appreciate. If we want to add silver bars or coins now, where or who is a reputable firm to buy them from? And do you recommend adding any at this time? We are, of course, certified clients.
Well, there you go. Once again, I think it goes back to my original statement. Would you agree with that, Rodney, the 5% threshold?
5%.
Yeah. And what we do for our clients, we buy the bars, whether it's gold or silver, directly from Fidelity. Fidelity will purchase it for you. They will hold it for you, store it for you. There's a 2% charge and a 1% liquidation fee, but you know that you're getting it at spot price, and you're going to be treated fairly. And I can't speak for a lot of those ads that you see on TV. The ones you want to stay away from are the ones that offer gold coins, especially the numismatic ones. Collector's coins, that's where people really get, in my estimation, taken advantage of. But if you want to buy the commodity, buy the gold or the silver, that's the way we do it for our clients. And once again, we caution, even though, the tendency is when you see things running up like they have been in the last few months, people want to jump in. Of course, that's exactly the wrong time to do it. Because if you'd have bought on Monday and then you looked at what happened yesterday, you're not feeling so good. But things do come back over time, but you never know. I mean, look what happened with the Hunt brothers. Remember back then, Roddy?
Yeah.
You remember that Hunt brothers corner of the market they thought they had, and then all of a sudden the bottom falls out.
Yeah.
So
Yeah, when you start hearing about it at the barber shop, it may have had its run, right?
For sure. My rule of thumb was my mother starts asking me about it, I know the markets are repeated. Yeah, yeah. So, is there anything you want to add to that?
So
commodity?
just to address that,
That was your
re-
topic for
the
today, wasn't
yeah,
it?
we'll talk about some
All right,
of
let's
the
do
reasons
it.
behind
Let's
the
do it.
silver, but
Yeah.
just to address the rebalancing,
Yeah.
the question that we just read there, if they're at 3%, then yeah, buy some more, right? Especially since you had the big price drop yesterday, and you can adjust it up to as high as 5% of the overall portfolio. But if you're at 5, then maybe you don't.
Right.
After the drop yesterday, maybe you don't
Right.
don't increase your position
Right.
in precious metals.
I think people are attracted to that simply because it seems simpler than investing in a equity or a bond.
Right.
People just don't understand that. They're trained to what it is. They're fearful of it, but they know gold and silver. I can see it. I can feel it. I can touch it. I know what it
Right.
is. It's not like investing in NVIDIA. I have no idea what's going on. And,
Exactly.
so I
It's
think
very tangible.
And the same thing is kind of like real estate.
Right.
A tangible
see it.
asset you can see, you can understand, you can walk in, anyway.
Do you remember Warren Buffett's example on that?
What's
on
that?
gold? He said that all the gold mined and hit throughout history, you could fill. Of course, it's gone up now, but you could fill, say, 15 Olympic-sized swimming pools in your backyard
Really?
with all the gold that's ever been mined,
Wow.
and it would be worth. Of course, now probably today's value is probably $20 trillion. But for that same amount, you could own all the farmland in the United States,
Oh.
and Apple twice, and Exxon and a few other companies thrown in there.
there you
So
go.
which would you rather have?
Oh, there you go. Yeah.
Because you can go out in your backyard and look at the gold, but it's not gonna produce anything.
And you can't take
Right.
it to Publix.
Right, right.
But there is a place for it. We don't want to poo-poo it. But once again, don't bet the ranch on it. Diversification. Long-term investors have quality and diversification, and that is, in fact, the key. So what else you want
right.
to add to that?
So
Commodities.
if we just going back before the last couple of days, before what's happened with silver the last couple of days, if you look at the last 6 months, silver is up about 60% in value, and this is what's got everybody talking about it. And if you look a year back, so if you look the 12-month change, the year-over-year growth in the price of silver is 250%. It was around $29
Right.
a year ago, and then it got as high as 117, I think, somewhere above 100, well above 100. Now it's come back in the last couple of days. We'll talk about that a little bit.
Sure.
But just in terms of, it has precious metal qualities like gold does, but it has a lot of other uses.
Yeah, industrial uses. I
exactly.
think that's what differentiates it from gold for the most part.
Right. So just looking at the things that have driven the convergence of factors that have driven the increase in price, one of them is the structural supply constraints in silver, because it's a byproduct of the production of other metals, and the demand has outpaced supply for a number of years. So we're seeing that affect the price of silver to the upside. And then surging industrial demand, which is what you just referenced. Electric cars use it. They use it in solar panels. That's still the largest area for silver demand.
Right.
Is solar panels. And then macroeconomic uncertainty, like geopolitical tensions, have increased people's desire to own something that they can touch.
Right.
Like you talked about
Right.
earlier. And then also another one that I hadn't thought about that I found in the research is the monetary policy. So when you lower interest rates, it actually decreases the opportunity cost of owning precious metals. So that's actually been a contributing factor. The decreased value of the dollar has been a factor that's impacted demand for silver. Renewable energy, solar panels is still the largest usage of silver. Still requires the most demand.
I wonder what the adoption of solar panels has been in the last year. They've taken away a lot of the credits and so forth, and there's some more skepticism about solar energy. I just haven't seen it. I haven't found or I haven't looked for.
But you have to think that it's waned, though, right?
I would think
when they took away the credits for the electric
Exactly,
cars,
yeah,
I mean
yeah.
the demand decreased significantly.
Yeah, for sure. Well, I hear the bumper music, Josh. That means you want to break in here.
You got it. Breaking news. It's time for you to call in right now to the Certified Financial Group. We got On the Money. Joe Bert, Rodney Ownby taking your calls live on the air. Available to you. 844-580-9326. 844-580-WDBO. Send in your open mic using the free WDBO app. You're listening to On the Money, where we're planning tomorrow
Today.
with the Certified Financial Group.
Third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're a Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now two wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course.
divulge the selection
Stay the
criteria,
course.
ask my colleagues what they thought.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here.
But we custody with national firms like
We're
Fidelity and
Certified
others.
Financial Group,
17
where we're
CFP
planning
professionals
tomorrow,
under one
today.
roof.
Or it could be because we're CFEX
Are you
certified.
tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're a Certified Financial Group, where we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as
And a real
fiduciaries,
person
have been
answers the
providing.
phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online.
CFG has been chosen once again as one of the top 100 financial advisory firms by CNBC out of nearly 40,000. And because they won't divulge the selection criteria, ask my colleagues what they thought.
Maybe it's because our history dates back almost 50 years.
Could be because we're independent. But we custody with national firms like Fidelity and others.
17 CFP professionals under one roof.
Or it could be because we're CFEX certified.
And a real person answers the phone.
In any case, we're proud to have been selected. So if you're looking for financial planning or investment advice for a fee, look us up online. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients.
WDBO.
Live on the air right now, Joe Bert and Rodney Ownby from the Certified Financial Group, available to you for free at 844-580-9326. 844-580-WDBO. Feel free to send in your open mic using the free WDBO app. And Joe, Rodney, if I could throw a question at you guys right now. I got a question from a listener. They sent it directly to me, so I wanted to just pass it along to you. Is that okay?
That's fine.
All right, this one comes to us. It says, due to job loss, my mortgage has been on a deferment of reduced payments. This just hit my credit report. I went from a score in the 800s, excellent, to now the low 600s, fair. How long will it take for my score to go back up once the mortgage is again in good standing? And there's a part 2 about how best to pay off that mortgage.
Okay. Well, the short answer there is it could be up to 7 years before you're back up to where you were. However, if you get that mortgage up to speed, you could accelerate that and reduce it by 7 years. So that's,
It starts to repair
it
it
starts to
immediately
repair
when you-
itself. Yes, yes. So,
Okay.
And what's part 2?
Part 2 says, I can borrow against my investments from a non-retirement trading account at 8.75% as a margin loan. I was thinking of using that to pay off higher credit cards that are accruing at least 20% interest, and my utilization of available credit is currently at 12%, but will continue to increase given the loss of income. Should I do the margin loan even though I'm still under mortgage deferment while I wait for more income to come through, or just hold steady and not touch anything? The goal here is to keep the credit rebound, or to rebound the credit as quickly as possible. Yeah.
What do you think, Rodney? She needs a slug of cash.
Yeah, and it's a non-retirement account, so
Right.
it seems like she could access
You could do
that.
it.
She could access that cash. That's a little less frightening to me than the borrowing
Yeah.
on margin against it. Yeah, I mean, that cash seems available.
Are you suggesting? Hold it. Are you suggesting that she liquidate her investment account or do the margin loan?
I'm suggesting that she use some of the investment account,
Really?
so liquidate a portion of it
Really?
to pay the 20% plus credit cards. You'd think the margin
Yeah,
loan?
yeah. Well, at 8.75%, you're kind of pushing the envelope there.
Right, and it's not a retirement account.
It's
so
not a
she has
retirement
access
account.
to
Then you
that.
got to look at any tax consequences of getting that money because you got gains on it.
Right, exactly.
You'd have to weigh that out. It's probably a toss-up. If the interest rate wasn't close to 9% there, I might. But definitely you want to reduce the credit cards.
Exactly. Those 20% plus ones need to go away.
Yes, yes. And then take that savings and then, begin to apply it toward, depending on how deep her credit card situation is.
Right.
You'd have to have it looked at. But
Yeah, some of the particulars would
Yeah.
impact this
yes,
a lot.
So there's no clear answer because there's a lot of variables involved here. But I think you're on the right track that you've got the ability to get out, definitely to get out from underneath the high interest rate credit card. That makes sense. And
Right.
and then if you could use that some of that money perhaps to correct the mortgage situation, depending on what the size of her account is. Think about this. If she takes the money from on margin and uses it to pay down the credit cards, and then also to bring her mortgage up to speed,
Mm-hmm.
it's almost like a home equity loan.
Right.
I don't have to crunch the numbers.
You'd have to see some of the details
yes,
of what's
yes,
in the
yes,
account
yes,
and all
yeah.
that, and then emergency cash
Right.
comes into play.
Right.
This is a
A lot of variables.
yeah. Sorry to hear
But
that.
I like the thinking,
Tough.
creative stuff, it's a little outside the box there, but but certainly focus on the high interest rate credit cards by all means. And you can get out from any of the 7 years if you begin to get that mortgage up to speed, and liquidating the investment account may be the way to do that. So there
Thank
you go.
you so much, Joe. Thank you so much, Rodney. If you want to call in with a question of your own, we got open lines available for you. 844-580-9326, 844-580-WDBO. Send in your open mic using the free WDBO app. Or if you're that listener and you want to get into the specifics, you got the answers that Joe and Rodney need to give you a more detailed answer. Wynn Smith is available to take your calls off the air. Available right now at 407-869-9800. That's 407-869-9800 for an off-the-air conversation with the Certified Financial Group. You are listening to On the Money, where we're planning tomorrow
Today.
with the Certified Financial Group.
Professionals acting as fiduciaries have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal.
Right here on WDBO AM 580, always streaming inside your WDBO app. If you're listening right now, or if you were listening for the last segment and a question popped into your head, I invite you to call in. And maybe it doesn't have to do with the topic today, Silver, or paying off a mortgage, or maybe you want to just plan ahead for your financial future to get you to and through retirement. That's what this show does. They're here to answer your questions during this hour. So if you want to call in, we got Joe Bert and Rodney Ownby, two certified financial planners with the Certified Financial Group, taking your calls today at 844-580-9326. 844-580-WDBO. Also have Wynn Smith taking calls off the air if you want to get right into the command center there inside the walls of Certified Financial Group. Wynn Smith taking your calls off the air. Available at 407-869-9800. 407-869-9800. Joe, Rodney, what do you say we hit some questions that came into us here?
Let's do them. Before we do that, I want to get back to a little bit about the drop in silver in the last 24 hours or so. What may have caused that? There's some speculation that it was Trump's appointment of Kevin Warsh as the new Fed chair. You think it's heard about that, Rodney?
I did. I saw that.
Because he is more of a inflation hawk, and inflation, make it strengthen the dollar, stronger dollar. Pushes down the prices of commodities. So when we're looking at weaker dollars, we've happened in recent times here. It pushed up the price of gold and silver. But Kevin Warsh's appointment has influenced the market somewhat. Certainly a 30% drop in one day is a big deal.
Right, exactly.
So anyway, all right, let's take the questions there, Josh. What do you got?
You got it. This one comes to us from Rich in Longwood, and Rich has got a pretty simple question. Rich wants to know if he can retire with debt.
Can you retire with debt? Well, it depends on how much and what kind. What do you think?
What's the quality of the debt, right?
Right.
The 20+% credit card is probably not a good idea to retire with that.
No, for sure.
But if you're, you've got a mortgage balance, you're paying 2.5% or 2 3/4. Yeah, I've seen that many times.
Right. Or if you're in the tail end of a mortgage,
Exactly.
I think it's the old psychology that I want to retire debt free. Debt isn't bad if you control it and if it's the right kind of debt.
Right. If you've got the cash flow to cover it and it's not crazy interest rate.
Right.
And you've done planning and looked at your cash flow, right? And you know you can manage it, then it's perfectly okay.
And one of the worst things to do is to perhaps cash in investments and get, just to reduce the debt, unless, like you say, it's a high interest rate credit card, like we had that email come in earlier. But debt in and of itself is not bad as long as it's manageable and it's the right kind of debt. So I think the old adage of retire debt free, I don't necessarily buy into that.
There's an emotional component to that, right?
Yes.
That makes you, makes you feel really good about it. But if you're managing it, then there's no issue having
for sure
quality debt.
Yep. So we hope that answers the question. You got another one there, Josh?
I do, and if you want to call in, we got some open lines available to you, 844-580-9326, 844-580-WDBO. Geraldine's got a question that's pretty on topic. Geraldine wants to know, should I buy physical silver or an ETF?
Geraldine, boy, that's a name you don't hear very often. I went to school with a girl named Geraldine, but that's another story. All right. So what do you think, Rodney?
You could do both. You can do what you said. You can actually, through Fidelity, you said you can own physical gold or silver. Right?
And you can have it shipped to you if you want.
Yeah,
We'll do
you can
that too.
you can put it in your safe in your house.
Right. Put it under your pillow.
And if you have Fidelity hold the physical gold for you, then you've got some fees associated with that, right? And then they'll liquidate it for you, but they'll charge you a fee to do that as well. So the ETF gives you more liquidity. I mean, that ETF typically owns physical gold for you, and then if you want to liquidate it quickly, you can do that. So it's a little more flexibility.
It's a way to do it. Yep.
Either way is fine. I mean, either way you own silver and have exposure to that asset category.
Yep, for sure.
You could do both, right? You could do a little bit of the physical silver and the ETF.
Yep. So we hope that answers that question. So what else you have there, Josh?
I got plenty coming your way. Jimmy wants to know. Jimmy says, should I be paying off my mortgage early or investing instead?
Well, it all depends on your situation, Jimmy. What do you look at, Rodney? So if somebody's sitting across the desk from you and they ask you this question, what are you going to tell them?
So it depends a lot on the rate, right? So rates now on 6% plus, and you're trying to generate over a period of time 6% on your portfolio, you're sort of at a point of indifference, right? You could do either and get around the same return from that. If you're like a lot of people we see who have older mortgages that are in the 2-3.5% range, you're probably better off investing that, right? And not necessarily paying. Again, that's really good debt,
right?
If you've got a low rate like that, and you can probably over time, as long as you take a long-term perspective on this, generate higher returns from investing those funds.
Yep. And once again, it all depends on the rate, what the loan is for. The ability to deduct interest today for most people that's out the window.
Right.
So that benefit is gone for a lot of folks, but it's something to consider. And those are the things that Rodney and I and the 15 other certified financial planners analyze when you come to see us to do retirement planning. We look at all those variables that you have to take into consideration: what your debt is, what the term of the debt is, what else you've got coming in to service that debt, and what's the possibility of losing the income stream that you're counting on to service that debt.
Right.
And then we'll try to figure out what the best course to do. So once again, that's what Rodney and I and the 15 other certified financial planners do for our clients, providing retirement planning and investment management for a fee. As I said in the opening, we do it for a fee on Monday through Friday. But we are right here for you right now, absolutely free. So anything on your mind, why don't you throw out the numbers again, Josh, see if there's some listeners out there that have some questions.
If you want to join the conversation, help you get to and through retirement, hop on the air and just chit-chat with some award-winning financial advisors. I invite you to call in right now. We have Joe Bert and Rodney Ownby, 2 certified financial planners with the Certified Financial Group, taking your calls at 844-580-9326, 844-580-WDBO. And again, we can also take your open mics inside the WDBO app. I'm not surprised, Joe and Rodney, that silver and metals are on the mind today because, gold has been having a slow rise and silver just shot up recently, and they both took a bit of a dip yesterday. And whenever our worlds cross, the stocks and the news, whenever I hear about silver or gold in the news, I know you must be hearing all kinds of questions about that.
Yeah, it's anything that you have a big day like that, we get questions about it and try to inform our clients and certainly our listeners, and that's why we're here on Saturday morning. We just had a Facebook question come in, Josh. You didn't see this, but I will read it. If I put my assets and home in a trust for retirement planning, I've heard I need to let the home insurance company know that the trust now owns the house, so I might have trouble filing a claim in the future if needed. How does that work? Do you know? That's the question. So we put the house the house is owned now by the trust.
In the trust.
Yes. So you definitely need to let your insurance company know. You don't lose anything. I'm sure the insurance company won't have trouble with it because you're still the beneficial owner, presuming you didn't put it in an irrevocable trust, which is a whole other can of worms.
Right.
We presume this is a revocable trust, what we call a living trust. Just be sure to let the insurance company know about that, and there should not be any problems. Once again, the benefit of the revocable trusts are you avoid probate. It goes directly to your beneficiaries and so forth. So, yeah. So hopefully that answers that question that came in on Facebook just now. So, I think a lot of our listeners don't know that they can watch this show on Facebook. So you and me right here live. There's some folks out there. We just give them a wave. And here we are. So you got another question there, Josh?
I do. Marcel wants to know. Marcel wants to know, how do I know if I'm on track for retirement? And again, if you have a question about anything in the news right now, or maybe your uncle said something that you want to just run it by the experts, that's what the Certified Financial Group is here doing right now. Live on the air, 844-580-9326. Marcel. Is he on, how will he know if he's on track for retirement?
What if Marcel knows Geraldine? Where are these names coming from this morning? Go ahead. So how will he know if he's on track, Rodney? What do we do?
Well, it gets back to planning, right? And looking at your cash flow and making sure that you've got enough cash flow to support your lifestyle in retirement. So you look at what your sources of income would be. Social Security is more universal. Pensions, not so much, but if you maybe have a pension or an annuity or something that's going to create an income stream for you in retirement, you want to make sure that income stream is covering the expenses of your lifestyle. And then to the extent that your expenses exceed that, then you want to look at your nest egg, right? And make sure that that's large enough to fund those deficits that your lifestyle may dictate that you run every month in retirement. That's sort of in a nutshell. I mean, it's
I think the most important starting point is an honest assessment of your spending.
Right.
This is where people, I think, underestimate what their spending needs are, or what you're going to need every year in terms of cash flow after taxes, and then factor in medical costs, because that is that is really the Achilles heel for many people of not having the ability to cover those medical costs. So, as you said, you got to understand what your nest egg is, what's going to generate the income, what's going to be tax-free, what's going to be taxable to you, what buckets do you take it from in terms of your retirement accounts, and how do we cover that gap, factoring in inflation, factoring in taxes. And those are all the things that Rodney and I and the 15 other certified financial planners do. And the beauty of our software is that we can show you, we can do these what-if scenarios right in front of your eyes. Say, okay, if we change this, change that, what happens? If you do this, do that, what happens? And then you have a course of action. Exactly. Back in the day, we used to do this on a calculator and a green sheet. It was not as good as we can do today. So thanks to technology. So,
well, that's an important point about healthcare, because historically those costs have increased higher than the average rate of inflation.
Yes.
So it's a very important factor to look at.
So you got something else floated in there, Josh?
Yep, we got a call from Gary, and we can take his question now, and we can choose to answer it. We got about 90 seconds left, so I don't want to rush Gary's answer.
All right,
Gary
let's
wants
get
to know,
question.
He's got money inside of an IRA, and he wants to set up or put some of that money into his grandkids' 529 rather, and just wants to know the best way to go about doing that. Are there any tax advantages? Any advice that you guys may have?
All right, we can cover that to break. Real quick, though, I want to mention we got workshops coming up a week from today. February 7th, it's going to be on Social Security planning, what the IRS, or not the IRS, but the Social Security Administration cannot tell you, and we're going to cover that 10 to 11:30.
And Charles Curry.
Charles Curry, go to our website, that's financialgroup.com. Financialgroup.com, you can make reservations right there. That one's filling up fast because it is a very popular one, because as we say, that Social Security can tell you what your options are, but they cannot tell you what is best for you and your family. So what's best if you're single, if you're widowed, if you're dependent, whatever those situations may be. Charles will cover all that and more next Saturday. So hope to see you there. Financialgroup.com.
Thank you so much, Joe and Rodney. One more segment coming up after this break. If you want to call in, open lines 844-580-9326. Win Smith taking your calls off the air at 407-869-9800. And Joe and Rodney going to head out to the text message land and answers Gary's question about setting up his next generations. We got more Certified Financial Group. You are listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina.
Right now, we got open lines for you, 844-580-9326. Win Smith taking your calls off the air right now. And after the show comes to a close, Win Smith is available to you and your questions and your future at 407-869-9800. 407-869-9800. Or if you want to walk into the high-tech futuristic offices of Certified Financial Group, we got opportunities for that as well.
Yes, we do. You can come by our workshop a week from today, February 7th at 10 o'clock. What you need, everything you need to know about Social Security before you apply, because as we say, once you've made that decision, in many cases, there's no chance to reverse it. So you want to come to that. It is absolutely free. Go to our website, financialgroup.com. And I see we had a text question float in there. Josh, I see it here on the screen about taking money out of your IRA. You want to read that?
Oh, I may not have that one in front of me. Is that?
Yes. I want to take money out of my IRA for grandkids 529.
Yes, you're right. Gary called us as we came into the last break, but couldn't hold on. Yeah, he's got some money in his IRA. Mm-hmm. And just like you said, he called before the break. He wants to know what's the best way to get that money over to his grandkids 529.
So she take it out of his IRA to fund a 529. Well, generally not a good idea, right, Rodney?
Idea. Especially if you're under 59 and a half and you pay penalty too, right?
Yes.
Taxes and the 10%
yes.
penalty.
Yes. So let's peel this back. If you take it out before 59 and a half, you have to pay taxes and a penalty of 10%, right? And then, of course, there's no tax deduction for putting it into a 529.
Right.
The money will grow tax-free until it's used for education. However, if you are, he has grandkids, so he may be retired. So depending on his tax situation, the seniors today with that senior benefit you get at $12,000 if you file a tax return, the standard deduction,
right.
It comes up about $46,000 of a standard deduction for the seniors today. So, it depends on your tax situation. You may pay very little, if any, tax on taking out of the IRA, but you want to be careful that you don't overdo it, because if you overdo it,
you create a void in your own retirement.
Exactly. So it generally it's not a good idea, but there's a lot of variables that need to be looked at, and you should sit down with a certified financial planner and have him or her analyze that for you. But generally, it's not a good idea to take money, pay taxes, and then put it into a 529 because you get no tax deduction.
Right.
So that's my answer. So we've got that workshop coming up. I want to mention also that we have Score My Funds. It's an opportunity for you to have the mutual funds or ETFs that you hold in your 401k at work or your IRA or brokerage account looked at by the Center for Fiduciary Studies. We will put it through the system. We will score it for you and send you a report within 48 hours. And if you want to follow up with us, you'd be glad to do that as well. We do this no cost or obligation for you. I hear the bumper music, Josh. That means it's time to close the show.
Let's close it down and let's open up the lines for Win Smith, taking your calls off the air right now at 407-869-9800, 407-869-9800. You've just listened to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.